Ladies and gentlemen, the crypto space. We're live on a Wednesday, February 23rd at 11:34 a.m. and it's crunch time in the markets. We have contradictory information all over the place. We don't have confluence of overwhelming support. We don't have confluence of bearishness. What we have is breached supports, and I'll show you a chart that's frankly standing out to me in so many regards. There's just been so few breaches of support on the Wilshire 5000 monthly TWAP in the last, what was that, 2008, 12 years, 13 years, give or take, that it's hard to neglect. And let's start out with this because I know folks want to talk about how do you play these markets, but we need to talk about risk management. Clearly, if you have $100 in the markets, you don't have risk management. It's just you're throwing shit against the wall and you're hoping something sticks. You're just hoping for that 100x. When you have a relatively small portfolio, risk management is not the play. Risk management obviously is a game that must be played when you've accumulated wealth and you want to protect your capital, but you still want to grow it. So you want to deploy to markets, but you need to do it in a risk considerate fashion. So the bottom line is Wilshire 5000 is 5,000 stocks. It's a great perspective on the overall health of the markets or directionality of the market. So since 2008, January 2008, that's one breach of the TWAP. Two, I would consider this one breach of the TWAP. Three, four, and five. This is March 2020. It seems so small compared to where we are. But the bottom line, there's only been five breaches of the monthly TWAP on the Wilshire 5000 in the last 12 years. This is it. It's either it means everything or the system has changed. It's different this time. I'm not going to bet the farm that it's different this time. In fact, I'm going to be protective until I have confirmation or excessive confluence that it's different this time. So in these conditions, I must be risk considerate. And how do you do that? You diversify gold, dollars, and synthetic dollars. Synthetic dollars, aka stablecoins, and you hold them in a position that is risk minimized as much as possible. And that's your risk play. Like, do you want to deploy stablecoins? Is there systemic risk where you have liquidity crises and bank runs on stablecoins? And I'm not really too discomfortable with the thought of deploying stablecoins in these markets. I think that is something that is likely different or likely established, or we've achieved a great deal of stability in that regard, especially CDP stablecoins because they are backed by value and the LPs. Anyway, what determines the peg is completely independent from the backing value. Backing value is pure psychological. Anyway, so this chart is quite disconcerting and it forces us to be risk considerate. We can look at plenty of charts and we can see bullishness and bearishness, and we can define stuff as like a bear market rally. Or if you zoom out large enough, this is just a giant bull market. There you go to this on the yearly. Come on. So it goes straight up. But if you're going to get a 30-40% dip, that's how you that's the difference between accumulating value in a short period of time versus over the course of multiple years. So if you made like $2 million in the last couple of years, if you got a 40% dip, you're going to cut a good part of your gains away. In the meantime, if you play it better, when it bottoms finally, let's say you hit a yearly TWAP on the Wilshire, then you turn that 2 million into 10 million instead of 1 million into 5 million. That's the type of logic considerations that we make when we're deploying our capital. And obviously, the smaller portfolios, you have a much less pronounced risk profile because, with less portfolio, less to lose. So you throw it against the wall. Most of what I talk about is protective with the larger portfolio. We've been in this game a long time. I personally, since over half a decade, I remember Bitcoin at 250, so I have to play this game a certain way, and I'm not the most useful source of information for folks wanting to hit those bear market rallies, of which there's a lot. Um, This is any. So I've made a couple of portfolio adjustments today, considering what's going on tonight at 12 p.m. Eastern Time, to my understanding, which is the start of solidly emissions. That's what Dan wants to know about. 26 people in the stream, 7 likes. Come on, we could do a little bit better here. So let's talk a little bit about solidly. I I have obviously been very risk off. About 40% of the portfolio was stables for a bit, and it's up to about 47, 48 depreciation of the asset positions. So about half stables, give or take. And I don't want necessarily too much exposure to volatile assets, but I do want exposure because I think this is massive. I think what's happening with Solidly is potentially one of the biggest releases of software in the DeFi space since its inception. I think it's basically the release of a Curve protocol and Convex, two Convexes simultaneously. So Curve obviously had its massive hyperinflationary decay. We understand that. We know the history. We've talked about it. Let's zoom out to the monthly, give you that good perspective. So we had a massive hyperinflationary decay, and then we had summer 2020, and then January, and we are where we are. I'm going to skip over where we are right now, but ultimately the hyperinflationary emissions found monetary policy balance because of convex consuming it and draining it from circulating supply. So convex balanced off the hyperinflationary pressures of the monetary policy. So bear in mind, if Solidly is launching with this same type of AMM incentive system, it's not hyperinflationary, and it's launching with two convex style protocols draining liquidity from circulating supply. So it's even more than if Curve launched with two convexes. It's even more than that because the solid emissions aren't hyperinflationary. In fact, they're likely not just disinflationary, but overall it's going to be net deflationary, but it's going to be so easy for it to be net deflationary. The emissions of solid are inversely proportional to the solid lock rate. So if 90% of solid is locked, it's going to be very little emissions. And solid X and 0x DAO are going to be draining the liquidity from circulating markets. There's a high likelihood this is an extremely rare, scarce asset. And that's crazy because we're talking about basically a Curve protocol. And we think historically of what happened with Curve, where it's been. It's massive. It's massive. So imagine the same types of LP incentives uh, incentivizing massive capital allocation, LP liquidity, to the solidly pools, and there being high returns but not hyperinflationary emissions. It could very well be that this combination of tokenomics as well as synergies and federation between 25 protocols can produce very high incentivized returns on these LP positions, not with excessive quantity of incentives, but uh, hyper appreciating price point. So you could actually, I could see less and less solid being given as incentives to these LP positions, but more and more dollar value, which is quite tantalizing. And we'll see how it plays out. It launches in 12 hours. So we're right here. So how am I not going to expose myself to this? So I see all these risks in the market. I see the Wilshire 5000 breaching the monthly TWAP. I see the amount of times it's breached it over the last 12 years. I see the fact that everything just fricking goes up over time. We all understand that. I want to protect some capital. So if we get 30-40% drawdown, the market shits itself. We get a 2020 style correction. This was massive. I mean, Bitcoin will get hammered to 20 grand, and that would be so bullish because it'd be a historic resistance flip support. It's a buy if you see support at 20. If it gets there, oh my goodness, there's so much buy support at this point. But if you have a liquidity event and shit hits the fan, all bets are off. You can have the most bullish, uh, conditions, but a liquidity event just disrupts everything, and just everyone goes risk off, and fear just spreads throughout the system, and the whole system convulses. So that's my sentiment. I drew this ABC corrective pattern. It doesn't look so hot on the monthly, but I drew this ABC corrective pattern on the weekly for curve. And we'll see. A lot of people think that there's a floor, and I myself have this purple box. There's a great deal of reason to think that this is a meaningful price action zone of congestion. We have historic supports inside of this purple box, support, 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 and then failures below it. But if this ultimately is, Elliott wave ABC correction, the C wave is stronger than the A, and this looks like that. This has that type of setup. And I'm not too fond of this current weekly candle having a lower low than our previous low, which we did not have back in or just before summer 2021. We had a higher low, and then we had a double bottom. So now we have a low, but then a lower low on the wick. So that's not bullish confluence. That's not confluence of support. That's confluence suggesting weakness. And what do you do when you have weakness? You protect your capital. Patrick, my thumbs, yeah. A lot of transactions today, getting those positions on solidly. Dan, hope that helps a little bit. Took minuscule bets on solid ELPs. I don't trust these markets. You shouldn't. There's no reason to trust these markets. Everything is screaming instability and risk. This is an interesting ETF, IEF. Anyway, that's just for diversification purposes. If you go out to the yearly, it just goes up. So this is obviously 7 to 10 year Treasury bonds, the bond price, face value, not yield. So if you see it hit the 50 SMA or dare it hit, I don't think it'll hit the DWAP. It never has. But if it hits the 50 SMA, last time it did that was 18. It didn't even do it in 20. It didn't even close to do it. So when this goes down, yields go up. So I don't think we could go much higher on yields on, for instance, the 10 year. So, but next stop, rates go to zero as the bond bulls, Stephen Van Meter, um, Colorado Travis, Jeff Snyder. It's inevitable. I think this is written in destiny. And this happens when there's a massive liquidity event. Everyone goes risk off and frickin' everything, and bonds rip to the upside. And then bonds become the risk on play. And then they intervene, and people sell off the bonds, as you can see. If you go to the 10 year, you can see that US 10 year. Let's go to the monthly. Here, 2020. This was the dip. So here, look at this. November 2018. Where's September 2019? Here's September 2019. This was the crisis. This is really the crisis that was going on with the repo market explosion. And then everyone went risk off on this red leg in March. Big risk off. Everyone bought bonds, and it's been rebuilding ever since. But the destiny is zero. I mean, come on, how's that not going to hit zero? It's like right there already. Anyway, Raul's in the house. Crypto Hub, JL, Noah, keep up the great work. Hope it helps, guys. Risky Crypto, Morning Cap. JL, you mentioned going over your thoughts on TradFi, real estate, U.S. economy in general. Would love to hear your thoughts on those things. If you get a chance today, I don't trust the real estate market. Mortgages, the amount of mortgages issued is collapsing, and the amount of they're laying off employees left and right. So we have overtones of 2008. We'll see what happens, but I wouldn't be buying properties in a time like this. And frankly, I think there's just too much opportunity cost in property ownership and rental management. It doesn't generate any damn revenue considering the price of the properties. It's just I think that it's a silly play. They're too expensive and you can't charge enough rent. So you're not what $2,000 a month on a moderate so one bedroom, two bedroom. Come on, you know what you could do instead of $2,000 a month? You can have no You can have no property, instantaneous liquidity, no management costs, no maintenance expenses, no taxes other than, income tax, but no like property tax and so on and so forth, or local city and state taxes, municipality taxes. There's so much freaking overhead with rentals. It's a waste of effort compared to liquid markets. And that's really the tantalizing opportunity of the crypto space if folks could get over their resistance to seeing these metaphors that I've been defining for the last 2 years, all these systems that are so analogous to traditional financial products and services. And banking, rails, and forex markets, and money markets, and synthetic dollars, just like the euro dollar. It is the euro dollar. It's the same damn thing. What's your take on multi now? Out for good or until VE multi comes out? So I took a position in multi this morning along with Geist, particularly because of solidly emissions. Um, speculating. These are small positions, nothing like I've historically had, but the amount of voting power for multi is big. It's 8.34%, and the voting power for Geist, this is right now the biggest, 33.91%. So runner up is, where's SolidX? Well, that got adjusted real quick. So Geist is really killing it with the voting at 33.91%. This is going to be a highly incentivized position, but it's a highly depreciative asset. It's hyperinflationary. So ending looks good, actually, from a technical perspective. We had a massive head and shoulders. It's by definition a head and shoulders if I've ever seen one. And what did you see here? Look at these support lines. You had a support failure and then a previous support flip resistance. So this is a perfect example, obviously in hindsight, depending on if people got out, of it failing. I think I got out around 19 and change. So that in hindsight, that was the appropriate course of action. When you see previous support flip resistance, that is bearish. That is not the good direction. That's poor directionality. Support holding support is weakness. Support flipping resistance is bearish. And previous resistance flip support is bullish, especially following a higher high print. Dan, is there any connection between Keeper and Solidly? Yeah, probably. Keeper, Iron Bank, and Solidly for leveraged uh, structured products, options, and stuff that Andre has talked about. Hazim, hey Noah, wanted to know your thoughts about monopolies in the crypto space. I'm talking about something like Chainlink. I think Chainlink is big and banned, and there's a bunch of oracles, but Chainlink is obviously the gorilla in the room. And oracles are necessary. But what I think is going to be quite interesting how it plays out with synthetic assets, like the Synthetics platform and countless other protocols that are establishing synthetic price points without oracles. They're using software unto itself to arbitrage and whatever methodologies are used for assets to have a real world assets price synthetically. And I think that's quite interesting. I'm not too interested in Chainlink. Never had a position in it. I just I'm not fond of the community. Um, Anything that the general public drools over and says, "Oh my God, it's going to $100." I have no interest in that shit. I don't want to be part of an asset that has an irrational user base. I want to be. I want to participate with assets that have narratives. Clearly, there's a strong narrative with Chainlink, but they neglect technicals. The technicals are horrible. They neglect competition. They neglect alternatives like synthetic assets. So there's a whole host of technologies in the on-chain data space or getting data on-chain space, or you don't even need to get data on-chain if you just manage it directly on-chain and it never comes in or leaves. Synthetic assets, for example, synthetic dollars they have a dollar price point. They're not using dollar oracles. They're managing the dollar price point via via techniques that are inside of the crypto space. Like, look at Tomb. Tomb mirrors FTM. That's fascinating. I doubt they're using an Oracle, so that is quite interesting. Um, so the other narrative that's big is cross chain, and that was like the multi swap narrative. But there's a lot, and I accept that now that there's a lot of cross-chain protocols, obviously Synapse and Metis, and there's a lot. It's not just multi-chain. So there's there's definitely that's the right narrative. How to align with the narrative is not so easy. Competition is complicated, and clearly the technicals have been beaten up. This was a good exit on my part, and I think this is a good entry. I'm not taking a large position. I don't trust the markets. I don't trust a monthly TWAP break on the Wilshire 5000. But I want to participate in solidly because its narrative is ridiculous. How could I not participate in it and expose myself to potential risk of volatility of these various assets, considering what I understand from a technical perspective, what it does, what it is, the tokenomics, the federation, the synergies between these protocols. I've never seen anything like this. This reminds me of Curve with two convexes and the Curve monetary policy being disinflationary. Very it's Curve technically is disinflationary, CRV, but this is an emission schedule that's inversely proportional to the lock rate. So this is this is like this is like Curve iterated, the next iteration of a very, very successful monetary policy. Now I tell you guys that all the time that that's a great thing to look for. Iteration, taking shit that already exists and making the next step with the concepts and the patterns and the monetary policy in general. Um, Hunter, so when you talk about getting exposure to solid emissions, launching and getting that exposure solely through any multi, are there any other tokens you're picking up? So I took 4 positions thus far on solidly. WFTM Geist, Beats, F Beats, Boo, X Boo, and WFTM Multi. They're all about equal weight, give or take. And overall, they're about 4 to 4.5% of the entire portfolio. So that's my risk management. Um, I'm not mostly cash. Folks say I was 50% cash, but now I'm down to like 40 and change. And I expect I am prepared for markets to shit the bed, and I am exposed to protocols that I think will outperform in bearish conditions. How could I not want to be exposed to something like this? But I'm going, and how do I manage that risk? By position size. I don't deploy excessively. So, you folks out there with a $10,000 portfolio, I wouldn't be deploying two, three, four, $5,000. That's 50% of your damn portfolio. And these markets are going to get hammered likely. All the technicals and the fundamentals point to stuff getting hammered. So I don't trust these markets. This is basically 2018 territory where we were heading into rate um, tapering of the Fed balance sheet, roll off of the Fed balance sheet, and then the famous Powell pivot. And he pivoted, and he ended up dropping rates. So that's where we are. They're tightening. It doesn't happen overnight. This takes months for this stuff to play out. They're not even going to be turning off QE until next month. They're still buying bonds. So let's see what happens when they stop buying bonds and dare they try and sell into a market that looks like, where's the 10-year? Into a market that looks like this. I mean, how are they going to start selling bonds if this thing rips through the 100 SMA? We're going to like 2.6% yield on 10 years. They can't handle 2.6% yield. If this hits 2.6% yield, the whole system is going to fracture. Liquidity is going to vomit. That's what happened back here. Every time this hits this 200 SMA, the system vomits. Does it the same thing, not even hitting the 200 SMA. The system right now can't handle that kind of debt servicing load. We don't have enough GDP. They'll end up reversing course on QE. They'll end up buying the bonds to cap the rates. We'll see what happens when they get there if that scenario arises. But I certainly don't trust the markets that have the Fed as a puppet master. Uh, you know, the Fed put, well, they'll step into the market, they'll fix the market. Sure, they'll step in and fix stuff, but in the meantime, a liquidity event is going to destroy the floor on everything, and everything goes risk off, and you're losing 30% of your capital. In the meantime, I got all that capital in cash, and that's where I'd be buying Bitcoin at $2,000. So that's the risk management I want to apply or I want to deploy to these protocols, but I have capital just in case the system goes in the wrong directions. Um, One curious view. Hey, Noah, quick question. What would the minimum CVX quantity for claiming bribes, assuming manual voting, consider gas fees? There is no minimum. The problem is you're talking about 30, 40, 50, $100 in gas to claim. So that's a lot if you have a $5,000 portfolio. You're not going to really care if you have a $500,000 position in Convex. So Convex is a very hard position to have, considering gas fees. Damn, Frax is paying out. That's crazy. That's big numbers. Um, it is what it is. So it's not easy to make these choices. Can you elaborate on why you went with CVX over CVX CRV? On the Convex site, the yield for CVX CRV is higher than CVX, so it seems CVX would be an opportunity cost. CVX, I wanted particular assets. I want fracs. I want more fracs, more, and more fracs. So CVX CRV obviously is CVX price, uh, aside from um, you get yield in CVX from CVX CRV. So that's why I went with CVX. Who cares what I did? You got to make a choice. And I personally don't trust really the price point of Curve. We know the directionality. This is clearly an incredible chart, like I've always discussed. Um, and I expect it to go up. I don't expect it to asymmetrically appreciate. I don't expect it to rip 10x. There's no reason we can't expect, 7, 8, 9, $10 in the months or a year as macro markets start to stabilize. Um, but look, the weekly TWAP. Follow the weekly TWAP. I think I saw the like 390 with the breach of the weekly TWAP. Now we're at what are we at? We're at $2.50. So a buck 40 I saved just following some of these technicals a bit. So that's the deal. I don't mind buying this. Listen, this thing hits $1, I'm going to be buying it all day long, especially if it does something like this. It falls below, it rips up, support, and then a higher high. More than happy to watch it fall down to 80 cents and then buy it a buck and a quarter after it produces or displays support held as support with a higher high. So it still is a position of weakness, but the higher high helps, and that is something that I would like to see. If it goes there, great. If it doesn't go there, great. I'm happy for folks that have the asset. I think there's plenty of assets. There's asset overload, boys and girls. Everyone's fighting over what's the best asset. It doesn't freaking matter. What matters is your strategy and how you look at these markets and how you look at these assets and just remain rational. And other folks will outperform and you'll do better at times. It doesn't freaking, don't stop playing other people's hands. Play your own hand and you can only be graded on how you played your own hand. Did you manage risk? Was there a liquidity event? If the shit hits the fan and you had too much risk on, clearly that's a boo boo. And next time around, you're going to want to be a little bit more risk considerate, and it's going to hurt. And maybe you were too risk off, and the market just rips to the upside. There's a blow off top, and everything goes to the moon. And oh, you didn't have enough risk on. All right, that's the hand. So that's you play your own hand. Um, Shisha, why are you comparing Curve to Solidly? Solidly is confined to FTM ecosystem. TAM is small unless FTM becomes smart contract chain. FTM is a smart contract chain. Solidly is confined to the Phantom ecosystem, uh, and it is launching. So I'm comparing it because Curve originally was only on Ethereum. Back when Curve launched, there was no Phantom, there was no Polygon, there was no Avalanche, there was no Binance Smart Chain, there was nothing. So Curve launched only in the Ethereum ecosystem. I remember when Binance Smart Chain just came out of nowhere. And then after that, it was Polygon, and Polygon was really following in the footsteps of Binance Smart Chain. And it took time, and now all of a sudden we have an absolute explosion of cross-chain opportunity. You go over to multi-chain, you can see clearly how many chains there are now. Dude, there's 33 chains, bro. Shisha, that's why I'm comparing solidly to Curve. This is crazy. That's crazy sauce. You want to see another crazy piece of data? Check this out. Enter app. Check this out. Pool. So talking about synthetic dollars all day long. Look at the amount of change that MIM is on. So MIM is predominantly an Ethereum product, so it has unlimited bridging to other chains. So it's a collateral and mint process. But if you scroll down to my, which is QiDao, look how many chains it's on, and it's predominantly a Phantom product. So this is many more chains than MIM. And where's DAI? DAI is on 1, 2, 3, 4, 5 chains. My is on 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 chains. MIM is on 1, 2, 3, 4, 5, 6, 7, 8. 8, 5 versus 14 chains. There's some serious stuff going on. And do not just fall back into that comfort zone that the asset you chose is the best asset. If you don't second guess your shit, the market's going to move away from you. You have to adjust. The narratives have to change. And they change quick in the crypto space. There is zero invalidation of Curve. So folks should not get me wrong at all. Curve has a moat. It is the liquidity of the pretty much the entire crypto space. Clearly, we see what it's doing to Uniswap v3. Clearly, everything still stands. It's an MMT currency producer. There's net deflation, disinflation with transitory periods of deflation. Convex does what it does. Convex pays. CVX CRV pays. Great groovy grant. Does it matter if something better exists? I don't know. What matters is tokenomics, monetary policy, and federation. So why is Curve what it is? It's because of the Curve Federation, which is basically the Convex Federation. And there's what, like 20 protocols that are trying to suck Curve and Convex out of the market. It's great. That's why it's been doing what it's doing from a price point and a revenue perspective. So what do I see here? The same thing. 25 protocols, 2 convexes. That's a big deal. And it didn't launch yet. So you can't judge it. We'll only know whether we have confluence saying what I'm saying makes sense after it launches. And that's where speculation comes in. And that's something you manage with position size. Shisha Curve is multi-chain, having 20 billion TVL. There's a big diff controlling emissions of 20 billion. Sure. Curve is awesome. Yay. I have a convex position because of Curve. Notice convex is what it is because of Curve. So I am exposed to the entire Curve ecosystem. Curve, convex, frax, ecosystem. So big proponent of the Curve ecosystem and federation of protocols. Art made a live stream. Welcome. John, Cosmos ecosystem is the only place to be right now. Only place to be is not going to work out optimally. Polygon is hot also. I mean, Avalanche is on fire, Phantom's on fire, Polygon's on fire. I mean, literally, Cheat just partnered with Celsius, a $50 million protocol partnered with a $20 billion CeFi protocol, where the whole point of the partnership is to take billions and billions of stuff, dollars worth of stuff, Cardano, XRP that does nothing. There's no liquidity, there's no collateralization, but now you get to Celsius could take $5 billion, take a $2.5 billion stablecoin loan, and rake in 10, 15, 20% on stablecoins, and now they're making an extra couple $100 million a year. So that's big stuff, and that's Polygon. Um, so don't think any one ecosystem is the best. Don't be too defensive of your positions. Get it wrong. I'm wrong. I'm right. Everyone gets it wrong, and everyone gets it right. And it doesn't matter whose ideas are better. What matters is the process. Be rational. Vasco, hey Noah, what is the difference between Solidly and Solidex? Solidex is the convex of Solidly. I provide liquidity for solid emissions. I'm opting for Solidly directly, which is like a curved LP position, metaphorically speaking. Solidex is not really proven yet, and they haven't had audits of their software. So I am resisting and restraining myself from allocating to their protocol. One curious view. I guess the question is, what kind of APR are you getting on CBX Bribe? Well, my Frax airdrop last week was 11 grand, so I'm getting 22 grand a month pretty much. What percent is that? 22 grand a month, 12,200. So I'm getting like over a quarter mil a year. That's I don't know. That's got to be 35, 40%. Cool. But the difference is I'm getting it in Frax. And I get the compound that, and Frax is coming online with CVX, FXS, and the whole Frax narrative comes into the picture. Whereas CVX CRV gives you CVX. Great. Lovely. That's a heck of a deal. We all know the directionality of CVX. It's getting hammered hard from a technical perspective, but I have my large position there. I don't expect for this thing to unlock and for me to take it out. This looks great. I mean, look at these. So what I drew here is by two lines, support holding support right there, and this would be a previous resistance holding support. So if we get down to the $15, $17 region, uh, you know, that's an interesting region. I would like to see it break above the 200 EMA, 200 SMA. It held above them for a while and tried to test them twice. So it'd be nice for it to break above, flip around for a retest, and hold support with the higher high. But I don't mind if it gets down here. That's the deal. I expect the market to shit the bed, and I expect support. And if it doesn't, great. So how do I manage that? I have a capacity to buy assets if the market shits the bed. And I'm exposed to the asset with many, many assets, like 10, 15 assets, in case it goes up. I'm prepared for both. Clearly, if we're in a raging bull market, there's plenty of times in history that I've been 0% stable coins. It's a raging bull market. This isn't a raging bull market right now. One curious view. That's what I'm getting with CBX. Austin Chow. Cap, I really need somewhere that you don't own any spell and I read somewhere. No, I have a spell and multi position as of today. I have spell position that persists is 4% of the portfolio. It's been depreciating. And I have a multi position that's where are we? It's probably about 2% of the portfolio, give or take, let's say. Yeah. Shisha, did you see solidly surpass curve? Do you see predominant? Hell no. Hell, dude, it hasn't even launched yet. Dude, it didn't even launch yet. But what do I know? I know that I understand the tokenomics. I understand the monetary policy, and that's some shit. It's some serious stuff. It's like tantalizingly serious. That's the bottom line there, dude. I don't care whether Curve or anything else does better. I'm going to have positions everywhere and I'm going to reallocate and I'm going to adjust the portfolio. If something outperforms, you will deploy to it. That's it. I don't see Curve's narrative getting invalidated. Maybe it does. Hopefully it doesn't because I'm exposed to the entire Curve ecosystem. A good part of my entire livelihood is from Curve generated revenue. Whole reason Convex is what it is because of the Curve incentives deployed to gauges. So my revenue is because of Curve. Make $250,000 a year because of Curve. So thank you very much, Curve. I hope that ecosystem thrives and continues to thrive. Maybe you want to diversify. Maybe you want exposure to something else. Maybe you don't. Maybe you're just all in and it's too complicated to think of the plethora of assets and the relationships between them. And it's very hard for many people to break down a portfolio into very structured positions. Risk management is completely absent in the crypto space. What if the market shits the bed? What happens to your portfolio? Are you prepared? Can you say yes? I could say yes. What happens if the market goes vertical and goes up and things start ripping? Are you prepared? I can say yes. I'm prepared. I'm prepared if the market goes down. I'm prepared if the market goes up. I have a capacity to rebalance the portfolio. I have a capacity to manage risk. And I do that predominantly with position size. Um, John, 300% of my ETH on SIF chain. I mean, dude, stuff on Cosmos is crazy. Dude, I got so much stuff on Cosmos that is just, I'm not going to pull up Kepler right now, but Cosmos is straight fire. And you guys know the way I feel about the Cosmos narrative. It's the China narrative and the BSN. That's it. That's big. So, big proponent of Cosmos here. I have a lot of capital on Cosmos. So, I expect it to just be massive in the next 5 years. And I look forward to 50x on my Cosmos portfolio. Um, Asun's in the house, a pleasure. Mike C. Geist just pumped from 100K FTM buy. I wonder if it's near the bottom. The Geist FTM has been close to flat the last 2 weeks. So Geist is obviously hyperinflationary, but when a secondary, an external protocol is paying people to buy it to provide liquidity, that is a disinflationary pressure. And that is a price appreciative force. So if ends up bribing, because SolidX and Solidly have a bribing component, just like Convex, that's going to drive capital into those LP positions to achieve revenue streams. Why? Because that's exactly what Convex does. The biggest advent of Convex is the bribery system. And what have we seen do very well? We've seen the Beethoven asset do very well. Because when did it do very well? I'll show you when. It's just extremely obvious when it started doing very well, if it loads. Hey, guess what happened in December? Bribery. The bribes for the gauge weight votes or the gauge voting. Boom. That's bribery right there. This thing has an incredible chart considering what's going on in the market. This is a straight up ascending triangle if I've ever seen one. So that happens to be one of my positions that I chose on Solidly. I'm not logged in at the moment. What's your opinion on Iron Bank and Morpheus swap regarding Solidly? Iron Bank is cool. Iron Bank and Keeper are tech that's needed for solidly structured products, options, and derivatives. Morpheus, I don't know. I haven't done enough due diligence to have an opinion. I hear good things. It's the extent of what I could say. The tokens, I mean, do you think they will get dumped hard if they pump while LP is ongoing? There's no LP ongoing. LP is not stopping. LP's voted on, and these protocols own the NFTs. So there's no temporary LP incentives. These are permanent incentives that don't go away. And if you're afraid that it's going to dump, this is like a buy the news, sell the event type thing. That's a serious risk, and you need to find comfort before taking a position. Don't take a position if you're afraid. You need to be able to sleep at night. So watch the position size and dig into the markets. I think Iron Bank is a decent position. If you look at the technicals, it's very volatile. So I don't have currently an IB position. I did. I nailed the 60% rip cap gains on it. This thing's ripping. I bought at 160 and I sold at 250. That was massive cap gains. I haven't done that in a while since like Rook a couple like year and a half back. This thing looks incredible. 232. Look at that. I sold at 250. I could have bought back at 150 and I should have held it. I think I bought and I exited probably around the same. I didn't trust the markets enough. But that's okay. So I missed out on some gains. Yay. Oh, is what it is. Happy for some folks I know have a very large position of IB, and I'm very happy for them. Where's Lewis? He's not on, but I'm sure he's very happy seeing this chart play out the way it's playing. I think it's going to head in a positive direction. Bear in mind, I will not buy something just because I expect it to be a higher price point. You cannot own everything you want to own. So I have a capacity to know Iron Bank is freaking awesome. It plays into solidly and structured products using Keeper. And I have a capacity to say, that's great. I expect this to go to 300, probably 4, 5, 600. I don't have to buy it. I don't have to buy it. So as of right now, I'm not. I'm not. Maybe I wait. It's a heck of a cup and handle, actually. Damn. Damn. Maybe I will take a small position. A 1% play. I mean, look at that shit. Wow. 250. Breach of 250, and that's a decent breakout. I'd wait. I'm going to wait. You wait for it to break, then you print the higher high. That's the type of stuff that I like to look for. So like folks will be like, "Oh my God, it's a cup and handle. I'm going to buy at 231." Oh, it gets rejected. But me, I'll wait for 270. I'll wait for it to be 270. Missing out on what? Almost $100. No, 270. There's $50 worth of gains. I'll miss out on the damn gains. I'd rather look for the confluence. The I'd rather look for the confluence suggesting it's more likely than less to continue higher. So that's the way I look at things. I'll buy it higher. I'll wait for it to be higher in price. Period. First bank to sign up on Aave, sign on institutional adoption. That's a big deal. Aave, I wish the tokenomics were better. I would love a fat Aave position, but it has basically tokenomics like MakerDAO. It just is very depreciative. MakerDAO will spin it all they want, where Maker MKR is up like 100% year over year. And that's great if you're a freaking millionaire. If you have $5 million and you're up 100% year over year, great. But the volatility on the asset is just very unpalatable. It just does not have favorable tokenomics. It's a heck of a cup and handle. Mike C, do you know if they're planned to open Convex on a second chain? I would expect so. I think Convex is massive. Convex is expanding to Frax. There is absolutely no reason it can't expand to anything with a decent tokenomics governance asset. Um, so such positive opinions of Convex, and my largest position is Frax. So I don't, I'll tell people all day long, things are going to go down. Meanwhile, I'm the first person that has a massive Frax position and a large Convex position. And that's all because of Curve. So the only reason folks respond the way they do is because they probably have a large Curve position and I don't. cares what other people have? I'm telling you flat out, I don't have a curve position, but all of this shit that I'm deployed to, all the assets I have are what they are because of curve. So logically, many folks would be like, so why don't you have a curve position? Because I don't need to own everything I want to own. You don't have to buy assets. That's the biggest thing that most people fuck up. Soon I've been DCAing, dollar cost averaging, boys and girls. Great methodology. Very effective. Can you imagine dollar cost averaging Bitcoin back in 2010? Probably have a couple $1 billion at this point. Anyway, Wednesday, February 23rd, 12:25 p.m. I thank you, everybody, for joining today. My Setmore has been doing pretty good. I got a couple of folks that want to talk. If anyone has any questions, just head over to noahseidman.com. I'm more than happy to schedule some time with you guys and help you guys out to be more rational and better navigate the markets. Now, it's not cheap, but it is what it is. And these are not easy markets to navigate. So if you need help, I'm more than happy to help. Keep your feet on the ground and make the best decisions possible. Tell everyone to subscribe. After party on Discord for the most rational community in the entire crypto space. Oh, those boys are awesome in there. Such great conversation. I wish you all a wonderful day. I will see you again on Friday. Peace.